one of the most interesting part that we take a lot of pride in saying this, and I think you can probably elaborate a little bit on this, Pratik, is India is Blackstone's second biggest market after the US. Second biggest. Correct me if I'm wrong.
That's correct.
Majority we have are Europeans sitting in this room. So I want you to give a little bit more color on that. Of course, we got clients from Southeast and Middle East as well. But why India? What is so exciting about it that such a big bet has been made on India, and how is it paying off?
Just stepping back, we run a Asia fund today, and India is the largest contributor of that Asia fund. So let me step back and start with Asia first. So Asia is give or take 30% of global GDP today, and it's give or take 60% of future GDP growth. The Blackstone DNA of business building, investing where you can actually add value through your network, through your scale, or you have the right operations expertise to invest in those sectors, it actually plays very well in Asia, even more so in India, because within Asia, India is definitely a very bright spot. And I think after 10 or 15 years of now continuing political stability and economic stability, I think ease of doing business in India, ease of investing, a very deep public market, a buoyant private market. I think for investors like ourselves, private investors, I think the more transparent a geography becomes, the more transparent controls become, it becomes naturally far easier for us to invest in growth. And growth in India, by the way, is visible everywhere. Today we are a $2,000 per capita GDP economy. Every place in Europe probably starts at 20,000, so 10 times that. So just the amount of headroom that exists in a country like this, and we require capital. It's not the richest, most well-endowed country. So of course it requires capital to grow. So in India, we are finding that formula, that there is a lot of headroom to grow. It's a young population. It's a English-speaking population. It's a very good source of talent from engineering to doctors, so on and so forth. It requires capital, and there's enough and more people like ASK, for example. There's enough and more people who can actually grow your capital, grow your value as well. So all these things work out for India. And this is not just me talking, the markets speak for themselves. I think over the last 20 years, the US, which I think is coming back to flavor, is becoming a very good market to invest in. The US has delivered, I think, 10% dollar CAGR returns over a 20-year period. And India has done, I think, 13%. So 13% dollar denominated CAGR, that's just the Indian market. So this has been going on for a while, it's secular. And it's just about finding the right opportunities, the right assets, where an investor like us can add value. And there's a lot of value to be created.